Another Monday, which of course means another week ahead. An important week this week as we look to some important releases coming out of China and what they could mean for a possible US interest rate hike in December. I'm joined now by Dimitris Kantzelis, Chief Market Strategist with XMarkets, to look ahead at this trading week. A stronger than expected US jobs report on Friday, Dimitris, which has left December as a greater possibility for a rate hike. Now this week investors will be looking to retail sales data out on Friday, as well as comments from Fed speakers. Do you think these factors are likely to confirm a possibility of a December Fed rate hike?
Actually, as we discussed last time, Fed members, they're waiting for the job numbers in particular. And last week, as you said, we saw some great job numbers from US, not even the unemployment, which drops at 5% from 5.1%. But the NFPs as well, that showed a very big growth to 271K, was a very, very good number. The rate hike is still data dependent. As I mentioned last time, I was waiting rate hike in September, but what happened with China changed things about the concerns that Fed had about the emerging markets. So this week, yes, we would be expecting retail sales. It's a very important news that everyone is expecting, but I don't think that will affect much what we are expecting now from the Federal Reserve in December. What job numbers did is that they've changed again the spirit in the market, so everyone now is waiting Fed to act. So if we go back and we think remember what the Fed speakers have already commented, they've said that with an average 180,000 growth in the NFPs from October, they will be fine to press the trigger. So I believe that relying on US job numbers now, they're fine. Now they would be only concerned about China. So let's see the China data, the Chinese data.
Of course, like you say, China data for this week will be very important, both for themselves and for the Federal Reserve. We have industrial production due on Wednesday, along with October retail sales, and Singles Day, the biggest shopping event in China of the year. What are your expectations from these events, and which do you think will give the biggest indication of how the Chinese economy is performing?
Yep, actually, yes. Let's start with the news from China. We've already seen, like yesterday, we had the imports and exports from China that fell well below the forecast. Those are some bad news, and they will certainly bring some more concern in the markets, in particular in the Federal Reserve about hiking rates, because indeed China remains a top worry for Federal Reserve. As we discussed last time, growth in China remains modest. There is no collapse there, but in essence, Fed is really afraid of strengthening the dollar and the impact on China. They're afraid of more Chinese exporting stimulus. So what I believe is, if the numbers from China continue to show modest growth, Fed will raise interest rates in December, and I would focus on retail sales from China this week.
ECB President Mario Draghi and Bank of England Governor Mark Carney are expected to speak on Wednesday at the Bank of England's all-day open forum conference on the reform of financial markets. After the hit £2 from the Bank of England's meeting and inflation report last week, what should we look out for in their respective speeches?
Not much of a change here, because Mario Draghi already said last time that ECB is ready to intensify the stimulus if price stability is not achieved. So actually, I don't see how he could refrain from that. So I believe that Mario Draghi will stick to this opinion, and market is actually expecting the ECB to go with further easing, which could result in an expansion in the bond buying program, plus a further cut in already negative deposit rates. So this is what I would believe from Mario Draghi. And what about Mark Carney? We saw Mark Carney last week. He's afraid of a move from an abrupt slowdown in China. This is what he is afraid that if they move and the China still goes with further slowdown, this could hurt the UK growth. But I really believe that if Federal Reserve will move in December, I think that UK will follow. Bank of England, will follow within the next 6 to 12 months.
Well, that's what's in store for this trading week. Keep updated with the latest news and data releases by clicking back to Dukascopy TV.